help too. Anywhere else you want these?
No, that's good.
Okay, here we go. Putting it in a few places. We've already got a couple people watching. Look at that.
Hey, look at that.
There. This group here. Mhm. Done. All right, we're up. What's going on, guys? How are you? We got a few people on the old TikTok thing going on here now. That we're live on Instagram. On the Instagrams. All right. I'm gonna bring you on. Here we go. 3, 2, 1, and welcome back, guys. I hope you've enjoyed everything so far. We've taken you through the entire process, all the way up to selling the house. Whether you decided to do it FISBO or MLS, you are going to have to get that buyer pre-qualified. We're going to take you through the process. I have got my #1 mortgage broker here on this live with us. So whether you're watching it live or you're enjoying it as a recorded conversation later after the fact, I'd like to introduce you to Matt's your mortgage guy, Matthew Victoria, mortgage broker extraordinaire. We've definitely been doing business together for at least 10 years. And honestly, he's my #1 pick on any deal. So take it away, Matt, and educate these people like you've educated me over the years.
Sure, no problem. The mortgage side of it changes on a regular basis, and if you don't keep up to it, you're going to wind up running into a problem where, hey, guess what? It can't be closed. So nobody wants that to happen. So what we have to do is we have to set everything up early on, so this way we know exactly what we're going to do. Is there something that we have to fix? Do we have to season money? Do we have to, move something around someplace? These are
So
the things that you want to.
let's take a step back, right? You're
Yeah.
talking about the mortgage business changing, and I think you're talking about guidelines. And a lot of these people are going to be pretty new, right? And I mean, I know mortgage guidelines change probably, as at least as frequently as I change my underwear. So probably once a week. But take it slow. I don't want them to feel like they drank from a fire hose, and give them the basics, because once they understand it, I mean, like I've told you a million times, I want to control every piece of a transaction as I can as a non-realtor. But the most important one is almost always the financing. I mean, I can always find another lawyer, title company, whatever, but they need to understand that you're the fucking gatekeeper. This is where the money comes from, right? So after everything's paid off, this is how you get paid, and that's what we need them to understand. Take them through that.
Well, not only that, but if a mortgage can't be closed on time and you have some serious delays, that's going to cost you more money. It costs you more money to hold that property. Interest on a hard money loan, taxes that you got to pay, a mortgage that you have to pay because of the seller or something like that. So
Or
that's
even if it's a pre-foreclosure and you're letting those payments roll, and it's a mortgage that you're going to not pay, which I very frequently do, it's still, if I got 30 G's as my potential net and the payment's $2,500 a month, well, now that's 37.5. How do you like that? I even do math now.
exactly. So it costs you money. So that's why you want to make sure that the mortgage person that you're working with is knowledgeable, keeps up on everything, knows how to work in the gray areas of this business, because we're governed by guidelines. Guideline says you can do this, you can do this, you can't do this, you can't do this. Well,
Mm-hmm.
knowing how those all work, okay, well, what if I go in between the guidelines? How do I bend it a little bit and give them what they need without showing them everything else? That's the important thing.
Mm-hmm. Okay. So should I keep moving on with these slides? Because I guess I'm controlling them over here, right? Or you want to try?
You are. So
I,
lending is very important because you need to have somebody that is trustworthy, reliable, knowledgeable, knows how to walk the line, has no problem with it, and is also accessible. You know, you need to talk to somebody at Saturday night at 7 o'clock. You need to make sure that that happens because this is a time sensitive business.
So basically, I need Johnny Cash as a mortgage broker. That's why you're wearing a black shirt, right?
This is blue, but that's okay.
You're still walking the line.
That's right. I walk the line. So why is this important? Well, you want to know, what is my end goal? Am I selling this? Am I holding this? Am I wholesaling this? Am I flipping this? What is your end goal? So knowing that helps you to start from the beginning. You have to kind of reverse engineer all of this.
Mm-hmm.
So you need to understand or have a general knowledge of the real estate finance to provide solutions to potential clients in distress. This is why you know what's your end goal.
So when you say reverse engineer, explain. I'm a little confused. You're talking about like how they made my iPhone from the crashed spaceships on fucking Area 51, or reverse engineering?
If you know that you're going to be selling this to an end buyer that's FHA, you need to understand some of the rules that go along with that. So this way you can set things up the correct way. Like, for instance, they only require 30 days seasoning on asset money to be used for FHA loans. So if you know the person has a bunch of cash, they need to drop it in the bank and let it sit for 35 days. But if you don't know this ahead of time, you go and drop that money in, and then next thing you know, you're trying to get it cleared for closing, and they show the assets and see a large deposit. Well, now you got a problem because how do you source that? Oh, I had a bag of money that I deposited. Underwriter's not going to take that.
Yeah, I learned that one early on, and they look at you really odd when you walk into a closing with like $80,000 in cash in your backpack.
Yeah. Prior to 2011, you could do all that, but now it just doesn't work.
No, they look at you even weirder when you do that. And this guy sold you a house for like $1 or $10. It's just nobody believes it's real. They start asking, is the seller in your trunk? So it's definitely something good to avoid.
So knowing reverse engineering is good because I'll give you an example. We had a loan that we closed in July where the guy moved a bunch of money. He had 3 different accounts, and we said, okay, what are the statement cutoff dates on all 3 accounts? So he told us. We figured out which one we needed to use. We dumped all the money in there the day before the statement closed or cut. And then that statement, when it cut, the next one wound up going to the underwriter, and we wound up closing the loan.
Really?
Yes, sir.
So you were juggling stuff. And
Yes.
I mean, as long as it fits in the guidelines, it's perfectly fine, right?
As long as it fits in the guidelines, if you just need to know what they want and how to present it to them.
So basically, you're a broker, right? So you can originate mortgages from several different lending institutions, and they give you the guidelines, and the guidelines are like the gauntlet that's been thrown down. And as long as you don't break the current rules of the game, then game on.
I like to think of it as creative financing.
Interesting. I knew there was a reason why we got along. What else do we have to know in this slide? You keep moving or stay here?
Keep moving.
All right. I'm trying. There you go.
So I call this ingredients of qualifying. This is what the underwriters look for on FHA conventional type loans: credit, income, and assets.
Mm-hmm. So it's
these,
like credit. I mean, do you break this down, or are we going to let them know what credit scores should be and all that other stuff right now?
I don't know. We're going to break it down on the upcoming slides.
All right. So I'm going to keep moving. Yes. There we go.
There you go. So credit basically is how you pay your bills. So a lot of times people let them go, and when they look at that, they say, oh, this person's a deadbeat. They're not paying their MasterCard. What makes me think they're going to pay a mortgage? And a credit score is merely a numerical representation of how well you pay your bills.
Gotcha. So, and who gives you that representation?
Well, your credit bureaus. So you have TransUnion, Equifax, and Experian.
And what are those governed by the government?
They're, believe it or not, no, they're actually private. They're actually private. And if you just saw, they had a big breach. I think it was Experian or Equifax, one of them. So unfortunately, they're the ones that govern the credit scores that hold people to getting loans or not.
I was afraid it was the government. I was like, wait a minute. So people who are like trillions of dollars in debt are gonna tell me about my credit? So, yeah, no, okay.
No,
I'm
they're
happy.
the ones that actually govern how we do loans.
Got it.
They write
God.
all of these fun guidelines we get to go by.
Yeah, they got their hands in everything.
So credit scoring. So we use FICO's 2, 4, and 5. And if you've ever checked your credit, like on Credit Karma, they use Vantage. If you ever check it on an app like Wells Fargo or Cap One or Discover, that's FICO 8. Unfortunately, those are not the people that are giving you mortgages, so you can't go by that. The only place to get your real credit score for a mortgage is either a lender like myself pulling your credit or paying myfico.com, and they'll give you your mortgage scores. Those are really the only two ways of getting your actual credit scores for mortgage purposes.
Very cool. Wow. Buddy Raphael Roman just logged on. All right. So credit scoring is not when I go out to a bar and talk to somebody with credit and then bring them home and sleep with it. It's actually a totally different thing. What's credit ranges then?
Now, if that were the actual method, I'm sure a lot more people would get houses.
Oh, I'd be scoring credit all day long.
So credit ranges. So the highest credit score we see is an 850. Right? Very
Really?
few people. Yeah.
What have you seen in 850? I mean, I'm talking to you here, somebody who's literally had like an Amex fucking black card, and I never had an 850.
Yeah. It's very hard to do.
In the high sevens, all I had to do was spend 250 grand on a business thing twice, in like 2 years in a row, and pay everything on time, and they send you an invite. But like, I never had an 850. I don't think I've ever been an 8.
If you want to know, I think the highest score I've ever seen is an 830.
So and when you break 8, they just give you the keys to the bank, right?
No, actually, if you want to know something, anything over 740 for us is irrelevant. So we cap it at 740 in the banking world.
Gotcha. Okay.
So
that's good.
Well, it's good to know because 740 and up that's really where it goes up to. Below that, we run in buckets of 19 points. So we go from like 600 to 619, 620 to 639. So it works that way, right? So that's where your cutoffs are. So certain loans have certain criteria, credit criteria. So that's where it breaks. It also affects your interest rate too.
Okay. So higher credit, lower interest rate.
Generally, yes. Not by a lot, but still, it's there.
And what are the interest rates at currently at the time of this recording?
5s on FHA, 6s on conventional.
God damn, that's gross.
Yeah, and depending on what you're at, like right now, Fannie and Freddie don't even want second homes or investment properties, so they hammer them even worse.
Yeah, I mean, second homes and investment properties. That sounds like it sounds like a boat. You know, it's like, who the fuck's got time for this shit? And I mean, you know what they say about boats? It's like having a second wife. The happiest day is the day you get it and the day you get rid of it. So I'm imagining that vacation homes are the same thing. It's a lot cheaper just to go rent some luxury shit for the weekend, unless you're going to turn it into a business like Airbnb.
Well, that's where the second home comes in for a lot of people. They'll buy a property and we closed one last year. She wound up buying it on a lake in Pennsylvania, and she was going to Airbnb it.
Mm-hmm.
Second home. It's not owner occupied anyway. So.
Okay, what's this trade line compensation thing you're talking about?
So you've got several different types of trade lines. So you've got installment, which is going to be a car loan, a student loan, things like that. You have revolving, which are credit cards. More importantly, MasterCard, Visa, not really store cards.
Mm-hmm.
And then also a charge card, which is like an Amex, where that comes due every month. Those are the three major types.
I haven't used a charge card in quite a while, but I used to use them all the time. Why would you even want one of them?
some people do, they get points. The thing that you have to keep in mind is that when you have a charge card with a $2,000 balance or limit on it or balance, then that gets looked at in your debt to income ratio, so that needs to be accounted for to be paid off.
No, I had one with no balance, and if I ever wanted to charge anything over 20 grand, you just had to call and get it approved. But
Yeah.
dude, it was like my 20s, my 30s. It was a stupid flex, and it just like meant the world to me to get that stupid fucking black card. And then I got it. Then my first ex-wife canceled it, and I just found it in one of my suits like a couple months ago.
You should call them up and say, "Can I use this again?"
I mean, the best thing about it is you just take it out of the bar and be like, "Can I buy it?" Whoops, and you drop it, and it clanks, and every fucking girl looks, and that's why you have. I spent $500,000 on a pickup line. That's the reason why you get it.
The bad thing for people is like there's people that buy everything in cash, but the problem is that those people wind up having crappy credit scores because they don't have any open credit.
Yeah, I've been one of those people too. I mean, all right, so what's the right way to do this?
So you want to have a couple of trade lines. So
Mhm.
you want to have at least 2 credit cards, and then use them. Make sure they don't close them because they just closed one of mine. I didn't think about it, and I'm a victim of my own problems sometimes. So what you want to do is you want to set something up that's recurring, Netflix or your cell phone bill or something. This way, it's always being used, and then just pay it off every month. But you want to have at least 2 major credit cards. This way, you can have trade lines because certain loans look for trade lines for 12 or 24 months of trade lines. So you want to make sure you have at least 2 open. This way, you have them there, and they'll give you credit because they look at credit history.
And we've actually got another piece that we just recorded on ways to increase your credit score and ways to remove derogatories. But go ahead, give me your take on it. And I mean, honestly, I've made a ton of money off people that couldn't get loans just by restoring their credit and qualifying them later down the road. What's your take on this stuff?
Well, for some people, we can do what we call rapid rescores. So we can pay something down, and like I just got one done. He was at a 617. I had him pay off 2 credit cards, and we got him rescored to a 645 in a matter of 3 days. So sometimes you can do these kinds of things when you're in a rush, or it's something that's simple to do. Once you have to go into like major credit repair, trying to remove collection accounts, remove lates, things like that, that's always better to leave to somebody. But if you're ever going to try and do a collection account yourself, and I don't advise that, but what you want to do is if you are going to pay something, make sure you get a deletion letter from them. If they're not going to give you a deletion letter, then you're better off going to a credit repair person and disputing it.
Yeah, I mean, I just use a credit repair person. I know you can try to do this stuff yourself, but I'm a big advocate of just using professionals. Like, it saves your time and it allows me to perfect my craft, which is buying houses. And apparently now it's talking to people like you on a camera. So, man,
Oh, and also try and keep your balances below 30% on your credit cards as well. That'll help too. Don't max anything out.
Gotcha. All right, what about this employment income stuff?
So this is the second part of it. So we have income/employment. So you have W-2, which is when you work for a company. Like I myself am actually a W-2.
Get the fuck out.
Yeah, crazy, right?
I thought you got a commission for every loan you wrote.
I do, but I'm still W-2.
I respect you so much less now.
I know. Unfortunately, the mortgage, the real estate lobbyists were paid a lot more money than the mortgage lobbyists, so we're stuck as W-2s. All that really means is that they take out our taxes, and I can't file myself as a self-employed, which sucks because I lose tons of deductions.
You can't just incorporate your name like Arnold Schwarzenegger or O.J. Simpson did, and then be an independent contractor.
No,
Only going to pay taxes and put the checks into the Matt Victoria LLC.
no, unfortunately, because I work for a company, they don't allow us to do that.
Yet another reason why I can't work for anybody.
See, look
All
at
right.
that. 1099 is somebody that is getting paid. A lot of the time, you'll see like physical therapists or people like that. They're 1099. So really, what that means is they have to file their own taxes. Uber drivers, a lot of those types of businesses or people are getting 1099. So it means you file your own taxes. You're technically self-employed because they're not, you're filing your own taxes.
Okay.
So W-2 employee, we're going to look at 2 years work history, right? So we're going to look at your 2 years of W-2, and then we're going to get a verification of employment. So what that means is your employer is going to break down your income, overtime, commission, bonus, and then your salary. So if you're hourly, they're going to give us your hours for the last 2 years of what you made in your base income, and then we're going to wind up averaging out those types of income. So that's all averaged out over 2 years. Just like if you have a second job, you need 2 years of history on that second job as well, and then we're going to average that income out.
Cool. All right. And what else do we need to know on this slide here? Work history, rental income.
So, 1099 self-employed, that's going to tie in with Schedule C. So what that means is you're filing a Schedule C, which is a profit and loss schedule, and on there is going to be your deduction. So the more you deduct, the less income we have to use. We look at net income, not gross income. We can add back in depreciation and mileage. So make sure you guys are taking your deductions because we can give that back to you. Rental income is also income. There's a Schedule E that you're going to file on your rental income. By the way, just to let people know, Social Security, disability, pension, all that counts as income too. So you can use that. So don't ever discount that.
Interesting.
Mm-hmm.
Okay. All right. So this is some pretty interesting stuff here. And basically we get you all this and you can pre-qualify people. All right.
Correct.
How about this? Factors continue.
Assets is going to be your money for down payment. We look at seasoning of funds. FHA is 1 month. Conventional is 2 months. Any of our non-QM loans, which I'm going to go into later, they only require 1 month as well. And it can come from retirement. So checking, savings. Robinhood is always a fun one because we have to get statements out of there and they're not the easiest ones to get out of. 401k, IRA, all of that is usable as income. And then also you're going to need, if you need reserves for any investment properties, that kind of goes into your assets. You can get gift funds too. So just know that whenever you get a gift, we have to know where it comes from. Everything is always paper trailed.
Yeah, my wife got me a wedding ring like a couple months ago. So does that count? Can you use that as a gift?
If you want to sell it.
Yeah, you should probably tell me.
Well, another interesting one is you can always sell something if you can get a bill of sale, and then if it shows reflective market value. So like, let's say you're going to sell a car. I actually think we were looking at doing this on one of the deals that we had.
Yeah. Yeah, I think I actually do remember that one. And I think that girl actually wanted to sell something else, but you told her it was illegal unless she filmed it and it was artistic expression.
It wasn't any income that I could use unless she can get it verified.
Yeah.
But you can actually sell a car, just have the bill of sale and then something showing the value of the car. Like, if it's worth $5,000 and you sell it for 20, that's not really going to work.
Oh my God, I remember this deal.
Yeah.
This was like Stockholm or something like that.
Yes.
It was a couple of years ago. We sold the house and the buyer
Maple
Patterson. We moved him out to Stockholm. He purchased the house. He was the head chef at like Dorsia or whatever the #1 restaurant is in Manhattan. And I think I had to like buy a car. We looked at it from something like that. Okay.
We were short some funds, so we were going to wind up getting a sale on the car. So,
well, we got it done. But what else do we have to do in this slide over here?
That's about it. You want to keep an eye out for large deposits. So if you are going to deposit money, talk to your mortgage person. Hopefully it's me. If not, somebody else. Make sure they give you accurate information. Anytime you're going to move money, have that conversation with the loan officer and say, hey, I got to do this. How do I do it? Because you don't want to figure it out afterwards like, oh, crap, we're in trouble. You want to do it the right way. And there are right ways to do it. So it's just a matter of figuring all of that out and having that information ahead of time. That's what I meant about reverse engineering things.
Gotcha. All right. So FHA, conventional, VA, that's virtual assistant, right? And what the
So
fuck?
VA is actually your Veterans Administration. So for any of our
Yeah,
people that are buying,
veterans and police and fire people I've noticed are really easy to sell houses to.
and non-QM are all of your alternative documentation type of loans, which I love right now because they come in handy with the current situation for people.
Mm-hmm. Okay. So those are like your stated programs.
Yep.
Cool.
So if you want to
And
hit the next slide here.
yeah,
So
I know. No,
FHA,
early on what I did is I would ask guys like you to actually make me a little chart with like this credit score, this income, they need this program, this. So I could just tell you here, this is what I think they need, and it kind of helped out. What do we got here?
so
FHA?
yeah, FHA, it does not stand for first time home buyer. It actually stands for Federal Housing Administration. They're the
I
ones
thought it
that
was
actually do the loans.
not Federal Housing Authority. Wow. Okay.
Yes.
All right.
So
So take me
re-
through it.
they're the ones that Ginnie Mae is actually the ones that insure USDA, VA, and FHA. So they actually dictate all of the guidelines for us. So it's 3.5% down payment on a 1 to 4 unit. So if you're
Mm-hmm.
owner, and this is all owner occupied. So if you're going to buy a 4 unit, you can buy a 4 unit with only 3.5% down payment. So I always recommend people go for the bigger units, go for 3s and 4s. This way you're going to cash flow. You can go
I've,
down.
I've rarely seen it done right, but I've had a few FHA loans in my day personally, and on rare occasion, I'd seen somebody who would actually buy a 4 family and then buy a 3 family FHA and still have a 4 family loan out, then a 2, then a 1, and everyone was like an upgrade. And before you know it, they had 4, 5, 6, 7, 8, 9 units that paid for their nice luxury house. So still pull that off.
Yeah. So how you wind up doing it is you FHA and then you refinance to conventional. Then you go and buy your 3 unit with FHA, live there for the year, refinance to conventional, and then you go to your 2 and then do it the same way.
And right now, your credit score could be down to 500.
Yes.
Wow.
It's hard work to get to a 500, but people do it.
I mean, I've done a few times. I just trash my credit and rebuild it because let's face it, it's all a fucking artificial system. It can all be manipulated. But I'm me. Let's talk about normal people.
I see it all the time. We actually just got somebody pre-approved. They went from a where were they? They were at a 560, and we wound up getting them up to a 620 now by her having her pay off a bunch of different debts. So and this is where credit plays into account because like with conventional, it's a 620, FHA is a 500 plus, and then your non-QM programs, they're going to want a 640 and up. So
Mm-hmm.
rental income on your multifamily. So if you're going to buy a 2 unit, you get to use one of them at rental income at 75% of that, and that goes into your gross income.
Well, that's pretty sweet. It's a good justification for having some 2 units.
2, 3s, and 4s. You're allowed gifts, so you can get a full gift from a down payment and closing costs from a relative. The
Yep.
only one you can't do is you can't use a cousin for FHA. It's got to be
Mhm.
a father, mother, brother, sister, uncle, aunt, grandparent are all the people that you use. Just can't use cousins.
Okay. No cousins. So is that like an inbreeding thing or?
Well, certain ethnicities, everybody's a cousin for them. So that's why they say that because they
I'm,
don't
I'm,
want just anybody. They want they you can you. It doesn't have to be a family member. It could be somebody with a close personal relationship. You just have to prove it. And I'll give you an example. We closed a loan last year where he wound up getting money from his baby's mother, and I would have to say that that's a pretty close personal relationship. So what we wound up doing was we got a picture of them together, we got a copy of the birth certificate and a letter of explanation, and put it all together, and we closed that loan last year.
so can I be the godfather?
Well, if you have pictures dating back from several years ago on Facebook, that's where you have the tie-in comes in.
I mean, it's amazing how many godchildren I'm sure I do at some point in time. So yeah, okay. It could work.
Pictures with everybody and post them on Facebook.
And all right, tell everybody what a seller's concession is, because some of these people are going to hear it for the first time. I've been talking about it a lot, but essentially it's over borrowing and having the seller give you money back to pay your closing costs, right? Is that a good way to explain it?
Right. So what happens is it's part of the purchase price. It's going to go back to the buyer to help them with closing costs. So it comes out of your net on the purchase. So let's say you're buying, let's say you're selling for $300,000 and you give them a $10,000 seller's concession to help pay for closing costs. You're really getting 290. So always make sure that you know that number and how it applies to you.
Gotcha. Okay. And can I get cash back too, or does all that have to be used towards the closing?
It's got to be used. If it's not used, it goes back to the seller.
So if there's a couple bucks later, I could just go, Mr. Seller, let's go out to dinner after this.
Sure, if you want to.
Okay.
Or if you have a creative lender, they can go and use it to buy down the rate or something like that and make some use out of it. But it'll pay for homeowners insurance, it'll pay for taxes and a lot of those other things.
All right. So tell me about these types of loans.
So now we have conventional. So conventional is a little different. It's Fannie Freddie. So we've got owner occupied, and your down payments are all different for conventional. FHA is just straight 3.5. Conventional changes in depending on what you're doing. So a first-time home buyer on a single-family property, and this is owner occupied, 3% down. If you're buying for the second time and you're not a first-time home buyer anymore, it's 5% on a single family, 15% down on a 2-unit, and 25% down on 3s and 4s as an owner occupant.
Okay.
And investor will 15% down for a single family, 25% down for 2 to 4s.
Okay. Sounds like I don't know. Sounds like a dog's in trouble or something.
Yeah, I think so.
Income allowed, gifts allowed, seller's concession 3, 6, or 9%. Why is that so high?
Well, if your down payment is less than 10%, you have a seller's concession allowable of 3%. If you go up to 20% or 24%, you're allowed 6% and then 9% over that.
Interesting. All right. Let's keep moving.
So it's good to know.
VA. So this is veterans. This is for people who serve this country. So you spent 4 years killing people and breaking things, and we're going to give you a discount on a loan, right?
Yes.
Okay.
So 0% down payment on 1 to 4s. Credit scores go down to 500. They're a little different. They don't have a DTI or debt to income threshold. That's probably something I haven't spoken about yet, but they don't have a debt to income threshold. It's more about either you get approved or you don't. You can get seller's concession. Gifts are allowed. They're not really needed because you don't have any down payment. You can get a gift for your closing costs. And then it's backed by the Veterans Administration. So, they really don't like to turn vets down.
I mean, they shouldn't. These people dedicated a big chunk of their lives to serving the country. Why shouldn't we give them money a little easier than everybody else? And now, if something happens and they get deployed or they get sick, they can also stall these loans where they don't have to make payments, right?
Yeah.
So what do they just do? I'm going to go kill people. I'm going to war. No payments.
You call up your servicer and you tell them you're being deployed, and then at that point they can put you into a deployment status. Another thing too is that there's no mortgage insurance. There's no monthly mortgage insurance on VA loans, so that's why they're good. And
Really?
on top of that, yeah, and on top of that too, if you're disabled, you can actually get your property taxes waived by the municipality that you live in too.
So wait a minute. So you're telling me that if I join the military and then I tell them that I'm dyslexic and I got a learning disability, I don't have to pay property taxes. This is fucking cool shit.
Yeah.
I had to start a church.
Yeah, it's unfortunately a lot of realtors don't want VA loans because they get scared thinking because they're not putting any money down that they're a crappy borrower. But the funny thing is that the average credit score of a veteran is about 700.
I
And a
am
lot,
not surprised. Like I've worked with a number of military people over the years, and they're trained. Like they can't not show up on time.
yeah,
It's amazing.
I
I feel
know.
like most of America should have to do this shit.
Yeah. So it's a great program. It's one of the main ones that people are going to see. There's also Jumbo and USDA, but for our sake or purposes, we're going to see more of these three loans that we saw.
Hmm.
And then this is the fun one. So we call this non-QM because what it means is it's non-qualified mortgage, which means it doesn't fit into any of the other boxes that we were looking at. This is not a loan that's backed by the government, and it doesn't go by any of their guidelines.
So who backs this loan?
These are all private. They're sold to investors. They're done by outside lenders. So we broker all these loans, and I've got different investors that do different things and have different flavors for what they want and take.
Okay, and so you got everything from like vanilla to Neapolitan.
Yes, with some chocolate chip cookie dough in there, with some mint ice cream, and yes.
We're pushing it
So
to Ben and Mary's now. All right.
depends on what you like. So no doc loans for primary residences. So what this means is this is no income, no employment. So there's only two things that you need for this loan. That's credit and that's assets. That's it. You don't need any income or employment.
So
Let that soak in for a second.
that's totally soaking in and marinating. And like what just dawned on me is I can take all these kids running around the office with decent credit because we made it that way, and I could just pull houses out of trust and deed them into their names. And then you got to tell me how long you need them seasoned for, and you could refinance and pull my cash out. I got a credit partner. Bitch, you better get my money.
6 months.
6 months or 3?
6 months. That's how long they have to hold them for.
Got it. I have one currently that I think I want to do that on. Wow, that would actually be with Mike. I don't want to go into too much detail on it right now, but I already have the deed signed. I might as well just give it to him. Be like, walk this down to the courthouse. He can refinance out. And wow, all right,
Now,
really.
when I was talking about credit before, so I'll tell you exactly what these companies look for. There's only 2 lenders in the country that do these kinds of loans, and they look for 2 trade lines. That's it, right? They want to see a FICO score of 640 and up. They want to see 2 trade lines for 12 months with activity in the last 90 days, or they want 1 trade line of 24 months with activity in the last 90 days. That's all they're looking for.
Say no more. This is pretty easy. This is just. I'm starting to see what you mean by reverse engineering. So you can literally build these people before you plug them into a property.
Yeah. And they only require 30 days seasoning on their assets.
So I can give them a house for 30 days and they can refinance out?
No. What I mean is that if they need money, like if you're doing a purchase,
Mm-hmm.
we only have to show them 30 days of that money being seasoned. So remember how I was talking about the guy before who wound up, we found out what day his statements cut?
Yeah.
Well, he dumped 100 grand into his bank account the day before the statement cut. And then we waited for the statement, and then his money was clean at that point.
Wow. This is almost money laundering. But not
Well,
quite.
and with gifts on conventional, it's a little different. When you're doing a gift on an FHA, you have to show the donor statement, and then you have to show the money being transferred. With conventional, the only thing they require is a wire transfer, because you just transfer it to title, and then a gift letter, and that's it. So we actually wound up getting gift money from his parents too. I don't know where it came from, but all I know is that I wound up getting a wire confirmation and a gift letter, and we closed that loan without any problems.
Yeah, if doing business in New Jersey has taught me anything, it's if it's not a problem for anybody else, don't ask fucking questions.
And that's what I mean about reverse engineering. So if I know all of this, then we can figure out what we have to do, what we have to move, what we have to put where.
Mm-hmm.
And then this way, we're not going to have any problems later, because you want to deal with it up front, not later. Like that's the reason why when I do my pre-approvals, I do everything up front. Give me your taxes, give me your W-2s, give me your pay stubs. I want all this now. If you go to somebody and all they do is just run your credit and say, oh, okay, you're good to go, there's probably like a 95% probability that loan is not going to close or not going to close easily.
Yeah, I mean, that's almost countrywide. Why don't you just email them the pre-approval letter in Word format and tell them to write it out themselves?
Well, Rocket or any of these other people, you know, they're not really being thorough. And, you know, this is time and money.
Mm-hmm. It absolutely is. That's why you probably hate me, because I'm like, are we ready to close yet? 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 Because I know the only person that I can't push and muscle through these transactions is you, because you got to do your tango dance with underwriters and all these other people.
Yes. So I have bank statement loans. So what does that mean? Well, if somebody's self-employed, people are generally the hardest people to do loans for. So let's say you don't have your taxes. What's that?
All right. I said guilty.
Yeah. So the no-doc loans don't ask for taxes, don't ask for income, don't ask for employment. So we have another type of loan called the bank statement loan. So let's say you have a very cash-heavy business like a restaurant or something like that. Well, what we do is we actually get 12 months of bank statements and we pull all the deposits out, and then we use a percentage of that as income.
Okay.
So
pretty cool.
It's cool. It's another option for people. So investor DSCR. That means that's debt service coverage, right? So it's purely based on rental income of the property. It's a no-doc loan in the sense that we're not collecting income or anything like that. It's purely based on the rent of the property. So as long as that rent covers the mortgage payment, you're good to go, and let's go, right? They can also be closed in an LLC, and then we can refi them out with hard money loans. So I'll give you an example. We just closed one. The guy bought the property in April. He had a hard money loan. He didn't need it for 12 months. We just refinanced him out now. And we actually did a cash out refinance for him. And they're based on the appraised value of the property, not the purchase price of the property.
Very cool.
And then cash out refinances on cash purchases. So cash is king, but the thing that you don't want to do is you don't want to tie your cash up in a property, because what can you not do? You can't go out and buy more properties.
Yeah, you can't put gas in your gas tank with real estate either.
Right. So when you have equity in a property, the only way to use it is to pull it out with a refinance. So we do refinances. A lot of people that might be watching this, they may own their own property. They actually have a lot of equity sitting in their property, so they can wind up doing a cash out refinance to use as seed money for buying other properties.
Cool. Okay. But they still have to pay it back, right?
What's that?
You still have to pay it back, right?
They have to pay it back. But hopefully they're making more than enough money on whatever they're using it for to make that a worthwhile investment for them.
So you got to get a better return on the money that you're getting with the property that you're buying than what you borrowed. So if you're borrowing at a 5 or a 6, you better be getting like a 12 or a 10.
Yeah.
Okay. What else do we need to know on here?
Cash out refinances on purchases. That's what I was talking about. So that's the gist of mortgages. So the refinances work. If you're buying something, you want to know what your end goal is. Am I selling this to a buyer? Am I wholesaling this? Am I flipping this? So these are all the things that you need to know. And like I said, reverse engineering. This is what we help people with.
Cool. So what I got from this presentation, right, and what I got a long time ago is this is like a whole other world. This is like a separate business within the business. And again, in my opinion, it's probably the most important one when you're selling houses, because realtors, lawyers, title people, buyers, sellers, everybody's replaceable. But if I got a mortgage broker that can get shit done, that's how I get paid. And I mean, I hate to say it like this, but the reason why bank robbers rob banks is what?
To get money.
That's where the money is.
Yeah.
Pretty freaking simple. So I am a very strong advocate of having a great mortgage broker on your team. And I could personally attest to Matt and his ability, just because I've known him. We've been doing this for about 10 years. And had few if any problems. He's not gonna bullshit you. You're gonna feel every bump in the road. And I know sometimes he calls me up, and I like the fact that when he calls me up, he talks to me like a beautiful woman. Like he won't even bring me a problem without telling me, listen, there's a major problem, but I have several viable solutions. So it's like he's already putting me at ease. It's like he's using the criticism sandwich there.
And remember Bond Street? We had a problem on that one, and it got fixed.
I do.
That was
Actually.
the guy that was short on a mortgage payment or something like that, and you want to give him some extra money and putting I think a lien on the house for it or something like that.
Yeah, I actually talked to him the other day. He's looking to do another one. He's a pretty good guy. He's a little bit of a pain in the ass, but we got it done.
Yeah, that was
I mean,
Miguel's.
none of them are easy. They're like snowflakes. No two are alike. And yeah. So what else do they need to know? How else can you help them, and where can they get you? Because and if they send you too much business, just turn it away and give my shit better attention. Because turn the fuck.
Well, you always get my attention, but they can find me on Facebook, Instagram, LinkedIn, Matt's Your Mortgage Guy, and there's always going to be problems. So it's about being proactive, trying to figure them out, and when you do have a problem, coming up with a solution. That's really what it is. And you have to be able to pivot and figure things out and say, hey, you know what? I got a solution for this. I've seen this before, or because I know so many people and I know where to go. It's like the president is not the smartest guy in the room, but his cabinet is. I have to make
Yeah.
sure I have surrounded by a lot of smart people.
And it's literally whatever transaction is you've almost applied the mastermind principle, where you've got a whole group of people on your team that is working on getting it through. And what I'm really trying to get these students to realize is it ain't just you getting paid off every transaction. Like, I may be walking away with a $30,000-$40,000 check, but you can make a couple bucks too, right?
I do. If I do enough of them, I can actually pay my bills.
Yeah, I mean, it's set up in a way that when everybody works together on a team, the mortgage guy gets paid, the lawyer gets paid, the other lawyer gets paid, the title company gets paid, the insurance person gets paid, even the realtor gets paid if you use one. Oh, and you get paid too. You're just like the team captain or owner or whatever, and you get a big check too. So this really is a team building exercise more than anything for every specific transaction. And I hope you don't have too many other people on your team now, Matt. But at the same time, I hope I do send you a little bit more business. You might have to hire some more people. I'm still working with you.
I have some people that are working under me now on the team. My wife, you know my wife, she's my processor. We have our own underwriter. We can do loans in all 50 states. So if you have something, then it's a great way to have a conversation and figure out what you're going to do with it. Or if you're selling a house and you've got people coming in, to buy that house, it's very advantageous to send them over to me. So this way I can make sure that they're correctly approved. Plus, and I know this is something that you do, you wind up giving the people that come in a seller's concession towards closing costs, saying, hey, this is my lender, use him, because this way you control the transaction.
Yeah, I mean, full disclosure, I am not a realtor. I'm not. So with me, it's not steering. And I've actually several times turned down higher offers on properties because they didn't want to use the lawyer or the financing person or the title company I suggested. They don't know, you guys all golf together and you like to work together, whatever it is. And okay, you don't want to listen. I'll give you a seller's concession, $15,000, whatever Matt says. Sometimes I even bring you out to the open houses just to pre-qualify people, and you can get a higher interest rate anywhere else. But I'll pay your closing costs, and I may even do my best to pay down a full mortgage point, so you get a lower interest rate on your loan by using Matt. So can I just save you, do the math, X number of dollars every month for the next 30 years? Would it be okay, Mr. Buyer, if I saved you money and put your fucking kid through college? Because that's what it adds up to, even if it's only like $300 a month times 30 years.
There's a reason why teams work better. because this way you have communication, because in this business, communication is everything, because people get itchy trigger fingers. They don't know what's going on. People always wind up getting negative. So you want somebody that communicates and communicates effectively. This way, you know exactly what's going on and you don't start wondering and getting afraid and scared.
Yeah. And I mean, I'll be honest, it could be a little nerve wracking early on because you don't really know what the fuck's going on. But developing relationships and trust in people like this and knowing that intuitively he's going to make the right decision for not just the buyer that he's writing a loan for, but myself and my business, make him a bigger asset than one transaction could ever be.
Correct. We're all
And
here to get a deal closed.
This is what I'm trying to convey to people. All right, Matt, you got anything else? Because if not, I'm going to bring you out. We're going to wrap it up in under an hour. And this was awesome, dude. Thank you.
No problem. And you know, I try to bring my knowledge and expertise to all of this. So if you guys need anything, you know where to find me. I'll be more than happy to walk through things. We fix stuff, we maneuver, we set things up, whatever it is. That's what I'm here for, to help out. I love working with investors, guys like Chuck, because you guys keep it interesting for me too. You make me work.
Yeah, but I think if you look at it like that, I might be your number one client. I mean, you got one individual guy who sends you more business than me.
No, you're my guy.
Okay, I thought my feelings were gonna get hurt. They didn't. Thank you. Oof, that was close. I'm gonna cry. All right, guys. I hope you've enjoyed yourself. I hope you've learned a lot. Matt's contact information is on the screen. Call him, text him, follow him on Instagram. Don't bother him too much till you got a house to sell or there's one you want to buy, but he's your guy. All right. There we go. Bye for now. I'll see you next module.